This is how to master your money and your mindset to become a successful trader.
For years, 5 trader archetypes have quietly shaped the markets. They have built fortunes, wrecked careers, and turned overconfident traders into market legends told as warnings in trading forums and trading floors alike. The problem is, most traders have no idea which archetype they actually are. And chances are, you don't either. And that is the hidden danger. The gap between who you think you are as a trader and how you are really wired. It is like forcing a sprinter to run marathons or asking a natural extrovert to sit silently in a library. Sooner or later, the mismatch breaks you. This invisible trap is why so many retail traders burn out within their first 2 years. So, the real question is, which archetype are you? If you are ready to find out, keep watching. The hunter-gatherer gene that's killing your profits. For thousands of years, humans have survived by fitting into specific roles within their communities. The hunter, the gatherer, the sentinel, the shaman, and the warrior.
All right. Okay. Hunter, gatherer, sentinel, shaman, and warrior. I assume that that's where he's going to go with all these.
Each archetype came with distinct neural pathways, risk tolerance, and decision-making patterns that kept the tribe alive. I guess it won't surprise you to know that trading didn't eliminate these archetypes. What it did was just digitize them. When you sit down at your trading desk, you are not just analyzing charts. You are channeling tens of thousands of years of evolutionary psychology through fiber optic cables. And if you don't know which ancient role you're playing, you will make modern mistakes with prehistoric consequences. Think about it.
That's interesting. One of the things I talk about is to be an outlier, to be successful in the market is not normal. What we do is not normal. Last year I put up 91.37% returns. That's not normal. Earlier this year, I was up 60%. That's not normal. Now I'm still up 15% for the year, and that's still not normal. What we do is not normal, right? You can't be a normal person and be successful in the markets. You have to be the opposite of everything that everybody else does.
Why do some traders thrive on 5-minute scalps while others can't stomach anything shorter than monthly charts? Why do certain people naturally cut losses at -2%?
Her cut losses. Here we go. I want to make sure we get at least one bingo today, maybe 5. I think we've had 5 before.
While others hold losing positions until they are down 50%. Why does risk management feel like fighting your own nature for some traders, but comes naturally to others? Because we are not all the same trader. We never were. Nobel Prize-winning psychologist Dr. Daniel Kahneman spent decades studying how the human mind makes decisions under uncertainty. His groundbreaking research revealed that we operate with 2 distinct thinking systems. System 1 is fast, intuitive, and emotional, while System 2 is slow, deliberate, and analytical. Dr. Kahneman.
What would you consider yourself in general in life? Do you feel like you're a System 1, fast, intuitive, and emotional, or a System 2, a slow, analytical, methodical type of person? I am very much, without a doubt, a System 2 type person. Right? I try and think things through, but I don't want to rush decisions either. But there are times when and I've seen this before in many different like how to be successful things that you need to quickly make a decision and stick with it. Brandon says he's a 2. Hang on, there we go. Brandon says he's a 2. Dr. J says he's a 1.5. Driz says he's a 2. Random guy says he's a 2. Salty Brad says he's a 1.
Kahneman showed that most of our financial mistakes come from System 1 hijacking decisions that should be made by System 2.
Well, there you go. If you said System 1, listen, I didn't expect that to happen. Anthony says he's a recovering 1. He's transitioning from 1 to 2. There you go.
What he didn't explore is how these systems play out differently across trader archetypes. A gambler runs on System 1. Gut instinct and emotions force them into rigid technical analysis, and they will abandon it or second guess every signal.
Oh, wow. Okay. Now, one thing I've told you before, and I know some of you guys have been offended by this, and I don't want to be offensive, but I do want you to understand that like you have to change your life, you have to change your mindset, you have to change everything to be a successful trader. And a lot of you guys, and this is the part that I know I offended people, apologize for that. A lot of you guys are gamblers disguised as traders, which means you fall very clearly into the system one when we need to be working towards the system two. Now, like I say, I don't want to be offensive, but I do need to, as your mentor, give you some reality checks every once in a while, right? We need to follow a plan. In fact, over the weekend on the Discord, I don't know how quickly I could find it, but I was reading this book right here, The Psychology of Money. And in fact, I'm glad that I picked this book back up. The first chapters didn't really vibe with me, but I'm glad I picked this back up. Now, one thing that I found highly interesting was, hang on, let me say, I saved it right here. So whenever we talk about building a trading plan, I like to show you the Monte Carlo simulator. And I like to say, look at the worst case outcome. If the worst case outcome, if the absolute worst case outcome is that you're still wildly profitable, then you are ready to trade. And you must build losers into your trading plan. Jim Simons, one of the most wealthy people in the world, greatest trader of all time, mathematically speaking, has built losers into his system. And I feel like a lot of y'all still haven't understood that losing is part of winning. Sounds crazy, I know, but you must understand that losing is 100% part of the game as much as winning is 100% part of the game. Now, I'm going to try and get this to focus on here, right? It's not intuitive that an investor can be wrong half the time and still make a fortune. It means we underestimate how normal it is for a lot of things to fail, which causes us to overreact when it does fail. This is something that I have seen in the Discord, and it drives me crazy. It drives me crazy because I've been there enough times. I've lost enough times where it doesn't impact me. I've won enough times where it doesn't impact me. And maybe you've not had enough of those cuts, right? Maybe you've not had enough cuts to where you've got enough scars that it doesn't mean anything to you anymore. But you have to, under every circumstance, plan for failure. You must plan for failure. Like imagine that you're in the military, right? Imagine that you're flying C-130s around, right? Or the projects that I worked on was the Predator and Reaper drones, right? You must plan for failure. You must. If you do not plan for failure, you did not plan to win, right? We must have contingencies. 2 is 1 and 1 is none, right? You must be anti-fragile. Okay. There are all these different things that you could put in your mind, in the back of your mind, to just be ready to anticipate the loss. And that's why we cut our losses short and let our winners run out of control. So yeah, this is a real thing, right? Going from system one thinking to system two thinking.
Then there are those who are analytical and operate purely on system 2. They are interested in data, backtests, and logic. But in fast markets that demand intuition, they freeze and get trapped in analysis. The beauty of it is that both can be profitable, but only if they truly understand who they are. So, how do you discover and confirm if you are a System 1 type of trader or System 2? Well, all you have to do is keep watching. The 5 types of traders. Comprehensive analysis of trading data from major brokerages like TD Ameritrade and E-Trade, combined with behavioral finance research from institutions like the University of...
You know, to the point that I said earlier, being anti-fragile. This is something that as we're working on my new trading plan with Scott, with the 4.0 data, we're looking at so much data. And all the time, you can ask Scott. Hopefully Scott's watching live. I say we must be anti-fragile. This is one of my key components in building a trading plan. What do I mean by anti-fragile? If it only works on Tuesdays, on leap years, when it's Tuesday the 13th of the month and it crosses the 9 EMA and the 17 3/4 EMA, that is one fragile AF trading system. That is so fragile that it will never ever work except for once, and then it works amazing. Being anti-fragile is to say I don't know what everything's going to be, but I know that this timeless principle will work, X number of times. I understand that this timeless principle has given positive expectancies. So therefore, it is a anti-fragile place to be. That is a huge, huge thing. And when you're building your trading plan, I want you to think of it from that mindset. How can I make sure that this is anti-fragile and not fragile?
Chicago's Booth School reveals 5 distinct trader archetypes embedded in market behavior patterns. These aren't personality categories or trading styles. They are archetypal neural frameworks that determine how your brain processes risk, opportunity, and market information at a fundamental level. 1. The Sentinel archetype trader. A Sentinel trader isn't the type who rushes into the market looking for fast profits or thrilling wins. They don't chase hype, and they're never impulsive. Instead, they play the role of a watchman, always guarding risk, protecting capital, and quietly scanning for both threats and opportunities.
I'm gonna give you a reduced risk on that one. I'm gonna give you reduced risk on that one.
Their entire mindset is built around one principle: capital preservation. For them,
That is 100% it. Hang on. Do we have any sort of capital preservation on here? No, not capital preservation. But yeah, either way, big deal.
losing money isn't just frustrating, it feels painful. In fact, research shows that when a Sentinel's trade moves against them, the anterior cingulate cortex of their brain lights up. That's the same region that activates when the body experiences real physical pain. This wiring makes them naturally cautious. They don't set stop losses because a textbook told them to. They set them because their nervous system
All right, I'll give you weight in cash. I agree with that.
demands it. Risk management is hard-coded into their behavior.
Is risk management on here? Hang on. Sounds like something I would have on here. No, that's okay.
Their philosophy is simple: win by not losing, protect the downside, stay in the game, and allow the slow but unstoppable power of compounding to work over years, even decades. Think of them as a fusion of Warren Buffett's patience and Nassim Taleb's obsession with risk. They are drawn to stability. To them, wealth isn't built through excitement, but through consistency. And when bear markets hit, this is when Sentinels truly shine. While most traders panic and scramble to protect their accounts, the Sentinel doesn't need to adjust much. They have been protecting capital all along. But their greatest strength
I see a lot of people saying to B4. I'll give you B4.
can also hold them back in bull markets. Their cautious approach often looks boring compared to traders riding flashy growth stocks or speculative plays. And when fear of missing out finally cracks their defenses, they tend to jump in too late, often at the peak. The best way to picture a Sentinel is to imagine a castle guard. They may not win every battle or rush out for glory, but they make sure the fortress, their trading capital, never falls. And in the long run, that discipline is what allows steady and compounding growth to build real wealth.
While you're watching this, Bitcoin is smashing.
Oh no, hang on. I think this is an ad. We're going to skip that.
2. The Hunter Archetype Trader. The Hunter is built differently.
I don't know what the others are, but I feel like I could be a hunter. Let's see. And of course, as we go through, I saw Manny saying that he is absolutely a Sentinel. But there's 5 different ones. I don't know which one we could be. As we go through this, tell me if this feels like this is you. I really want to know.
From most traders. Their brain is a machine for pattern recognition, spotting subtle inefficiencies in the market that others overlook. But what truly sets them apart is their patience. They can wait not just days or
Patience. I swear that's got to be on here. Hold on. I'll give you follow your plan. That is very much me, right? The sit in cash and don't F up type of person.
weeks, but months, even years, for the perfect opportunity.
I agree with that wholeheartedly.
Unlike other traders, their brain doesn't light up from small, frequent wins, in fact, Quick scalps and tiny profits bore them. What they crave is the big dopamine rush that comes from executing a
Okay, this feels very much like me.
flawless trade after a long wait.
There you go. Trade what you see. And Nate, I appreciate you, my friend, said, wait for confirmation. Skinny Buff Guy also said in one. Ozzy Ian is saying 01. I don't know about 01 just yet.
To a hunter, one perfect setup is worth more than 50 average ones. This makes them thrive in strategies where patience and timing matter most. Their preferred weapons are technical analysis, earning surprises, sector rotations, and strong fundamental catalysts.
Okay, the sector rotations, technical analysis, the data that goes with everything in Outlier, this very much fits for me. Now, I'm agreeing with this for me personally, but it may not be the same for you. Let me know in the chat when you see one that works with you.
They excel at swing trading and position trading, where waiting pays off with premium returns. But this strength comes with weaknesses. The hunter struggles in choppy, sideways markets,
Oh my goodness, this is like describing me to a T.
where no clear patterns emerge. In those conditions, their patience feels wasted, and they can become restless or second-guess their setups. Another pitfall is analysis paralysis, because they see so many variables and want the perfect entry. They often hesitate too long, only to watch a great trade run away without them. Sometimes,
Which is why, and I've said this before, in fact, I learned this directly from Larry Height, one of the the first $1 billion hedge fund manager, one of the market wizards. I worked directly with him. He said specifically those words to me. If you see a trade set up and it fits your plan, you are obligated to take that trade no matter what. I will never forget him telling me that. And that's because, right, there are weaknesses that can happen. And also there's biases that can happen, right? If you just came off a losing streak, you may not believe in your plan anymore. But that one trade after, let's say you had 5 losers, that one trade could pay for 5 losers all at once and then be their biggest trade of the year. It could be the one big trade that you've asked for a decade. And if you don't take it because of the last 5, you have implemented biases onto it that you need not have done, and therefore you have broken your trading plan at all. You've got to pull the trigger. That's right, Mark. Or Art, not Mark. That's right, Art.
the pursuit of perfection becomes their biggest enemy.
Which is why that goes back to the being anti-fragile. That's exactly being anti-fragile. Because if you set yourself up where it's a must happen, these exact variables on this exact day, on this exact reason, it is so fragile. This is what we're talking about exactly by being anti-fragile. Look at that. This is so totally me.
Famous examples of hunters include Paul Tudor Jones.
That is not PTG, by the way. That is not PTJ. That's Jesse Livermore.
Stanley Druckenmiller, and William O'Neill. Traders known for waiting patiently for the big opportunities and striking hard when the odds are stacked in their favor. In short, the hunter is like a skilled predator on the plains. They don't chase every shadow. They stalk, observe, and wait for the exact moment to strike. Because to them, one clean kill is worth more than a dozen failed chases.
All right. If you feel like you're a sentinel or a hunter, put that in the chat, but also make sure you put #outlier. That way you can win big money bingo.
Number 3. The Explorer Archetype Trader. The Explorer thrives on novelty and uncertainty, while most traders see chaos and run from it. The Explorer's brain reacts the opposite way. Their neural pathways light up as if they have just been handed a gift, because to them, uncertainty is opportunity. Explorers are the early adopters and trend spotters. They are drawn to the new, the untested, and the cutting edge. They are the digital gold miners, digging into unfamiliar territory before anyone else realizes there's treasure there. Their favorite playgrounds are places others find too risky or too confusing. Think of emerging markets, brand new asset classes, IPO launches, cryptocurrency before it goes mainstream. If you want a picture of an explorer, think about the person who bought Bitcoin at $100, Tesla before the Model S, or a biotech startup nobody had heard of yet. They always seem to have money in something the mainstream hasn't discovered. Their edge comes from a comfort with ambiguity and a willingness to bet on paradigm shifts before they are obvious. They don't need all the answers. They are skilled at recognizing potential long before the data is clear.
All right. I will give you B1 for trend spotters, and I'll give you B5 for emerging market cycle. I will give you both of those. I love it. Good job. Keep it going.
But this comes with a danger, knowing when to cash out. Because explorers believe so strongly in the long-term story, they often hold too long.
Oh, interesting. Okay, so they believe in the story. And so for and like I say, I can only give my perspective because this is the only life that I've got to live so far. The idea of investing based on a story is very flawed to me. It's very flawed in a way because like only the price will put more money in your bank account, right? Only profits pay. You know, we used to say something that we got to cease and desist for that sounded like only, you know, something pays, right? Now, this is where it breaks for me. And if you want to put whatever that was in the chat, by all means, go do so. This is where it breaks for me as far as the story goes, because the story can be one thing. The story can be amazing, and the stock can go down for years and then finally find a bottom. I mean, AMD is a perfect example, right? AMD went down for months and months and months, and there was so much story hype around it. And even though I can't say this, Richard said it. I can't say it, but Mikey Mike said it. Manny said it better. Only dollar amount pays. Data pays. There you go. Jim S. Only price pays. So, I mean, I didn't say that. Jim S. said it. AMD went down for months and months and months, and I'm screaming at everybody, and I'm saying, and I was doubting myself because I kept seeing all these YouTube videos talking about how AMD, you got to buy it, you got to buy it, you got to buy it. As it was crashing down from like $200 to 150 to 130 to 120 to 90, and then I went all the way down to 70. It did find a bottom, and then it started to go back up. But it took people 6 months, 8 months, if they were buying it in the downtrend, just to get to break even. Just to get to break even based on the story and the way the price was going, right? Because they weren't price action pays. Oh, I like that. They weren't getting paid by the story. You're only going to get paid by the price going up. And that's why I tell you guys, write this on your wall. Buy stocks as they're crashing up, not as they're crashing down, because then you'll be to profit that much faster. So the story to me is almost irrelevant if the price is not telling you that it's going up.
A 500% gain can shrink to 50% because
Shut up, Eric. That was a terrible story.
they waited for the big future instead of recognizing when the inefficiency had already been priced in. Famous explorers include Cathie Wood, Chamath Palihapitiya, and the earliest crypto adopters. They built
okay, Chamath Palihapitiya. I had to Google up how to say his name one day. It's Chamath Palihapitiya.
reputations and fortunes by spotting massive opportunities before the crowd, but also face criticism for holding on to positions too long. The explorer is like a modern-day adventurer. They set off into uncharted territory, take risks others avoid, and discover opportunities long before the masses arrive. But just like the explorers of history, they must learn when to plant their flag and when to head home before the frontier turns dangerous. 4. The engineer, archetype trader.
All right. So if you feel like you're a sentinel, a hunter, or an explorer, put what you feel already in the chat if you haven't already. But whenever you're doing that, make sure you type in #outlier, because somebody's going to win Big Money Bingo, maybe more than one somebody, and you can't win unless you put #outlier in the chat.
The engineer doesn't see the market as a battlefield of emotions. They see it as a complex machine. Their brain works like a biological computer, and what excites them isn't the thrill of guessing or gambling, but the precision of systems, rules, and formulas. For the engineer, discretionary decisions feel uncomfortable, almost painful. Their neural wiring craves structure, backtests, and statistical edges.
Okay, hang on. I might feel engineer as well. And, I guess you could blend some of these things too, right? So while I feel very connected to the, what was that? It was the, not the sentinel, the hunter. I can certainly come along with engineer. Let's see what he continues to say.
They don't trade charts or news headlines. They trade mathematical probabilities. Their ideal environment is one where the rules are clear and repeatable. They thrive on algorithmic systems, momentum strategies, mean reversion plays, statistical arbitrage, and pairs trading. If emotion is the enemy of most traders, the engineer solves it by removing human emotion entirely. Every action is defined by code, numbers, or models, leaving little room for gut feeling. But they have their challenges. Markets are living, breathing organisms. They change, and when they do, the engineers' carefully built systems can collapse. A strategy they have backtested.
Being fragile versus anti-fragile. And I think that engineer and hunter go really well together, right? They're very good complements, and that's why Scott, our intern, who's basically the one of the smartest people that I've met, and I love smart people. Let me tell you, dude is coming to town with all this data, and it is helping me as a hunter so much because I can identify, okay, this makes sense, this makes sense, this makes sense. In fact, over the weekend, Scott sent me something that I was looking at the data and I was like, hang on, there's a point of diminishing returns here. And it was the age of order blocks. And it was the older the order block that you used as an exit signal, the greater it made it the expectancy was. And then it reached a certain point. I'm like, hang on. While it may be a greater expectancy to go for longer, there seems to be a diminishing point where and going from like 3 basis points to 0.3 basis points, and I'm like, that's not going to do it for me. But the engineer can look at it and say, well, it's higher, therefore it's more better, right? So either way, I could definitely see some weaknesses in the engineer trying to overfit data, being more fragile than anti-fragile.
Flawlessly for 5 years can suddenly fail in year 6 when the market regime shifts.
Oh, hang on, momentum. Did somebody say momentum? I heard momentum. I also heard some people talking about stop losses. I'll give you that. Ooh, we are really close to at least one bingo.
What once looked like a perfect model can turn into dangerous fiction. Adaptation is the engineer's greatest struggle because their brain isn't wired for intuition. They find it difficult to pivot when conditions change. They can overtrust the data, even when the market is screaming that the rules have shifted.
Okay, this is actually a great point. So Mark, our chief strategist, he was out last week with some family issues, and thankfully he should be back this week. But Mark and Scott and I were having conversations over the weekend, and Mark jumped in and he's like, listen, it may have higher expectancy, but you also need to consider that there are big losers baked into the data that are being obfuscated, big word of the day, they're being obfuscated by the expectancy result overall. Because let's say if we're looking at a data set of 8,000 trades, there may be one big, ugly, nasty loser in there that because of all the other data, it gets, totally obfuscated. So he's like, listen, even though you can't see that, you still need to plan for that event happening, right? Still need to make sure that you are anti-fragile, right? Definitely engineer with some hunter. Look at that, Brian.
But their salvation lies in building adaptive systems, models that account for changing conditions, and learning to accept that sometimes, no matter how strong the math is, a dose of human judgment is necessary. The engineer is like a master architect of trading systems. They can design intricate structures that outperform human intuition. But when the ground beneath shifts, they must learn to adapt or risk watching their flawless design collapse.
See everybody trying to give 01. I am not ready to give you 01 just yet. I see it coming through, Jaime. I see it.
Number 5. The Alchemist Archetype Trader. The Alchemist is wired almost...
Okay, so if you feel like you're an engineer, let me know in the chat. So we've had, let me go through here real quick. We've had the Sentinel, we've had the Hunter, we've had the Explorer, we've had the Engineer, and now we're having the Alchemist. So let me know which one you feel like, and of course, whenever you feel like one of those, put hashtag outlier in the chat. Now, Chris in Wisconsin says, you become the meld of your 5 closest friends. Who do you hang with? Yeah, I've heard that exact same thing. I heard it from Tim Ferriss, author of 4-Hour Workweek, which changed my life, by the way. This book right here completely changed my life, the 4-Hour Workweek. And the, I mean, it makes so much sense too, right? If you think about it, right? The people you hang around will determine your future. So for example, oh geez, hang on. So I don't know what I was listening to over the weekend, or maybe I was reading a book or something, but it was like, if you are hanging with 5 alcoholics, you're about to be the 6th. If you are hanging with 5 millionaires, you're about to be the 6th, right? It is a real thing, right? And like the roughneck says, he hangs with outliers. Yeah. So it is imperative to surround yourself with people who are better than you is not the right term, and I don't want you to think of it either. People who are achieving some of the things that you're looking for, right? Maybe you're trying to find success in the markets, and that's why you hang on these type of channels. And I am so glad that you're here, right? I am chief marketing officer of OVTLYR, so I spend a lot of time on marketing channels. I spend a lot of time reading marketing books, but also at the same point, I want to have Master of the Universe money, which is why I like to read Masters of the Universe type of money books, right? Like the Psychology of Money that I was reading. So it really is a find your goalpost, surround yourself with people who are at that goalpost now, and you will become one of those type of people. It is very, very, very true. People have the same mindset, right? Iron sharpens iron. Let's see. Hang on. Charlotte, I absolutely love it when I'm the dumbest person in the room. When I was in the meeting with Scott, he's in his early 20s, and Mark, who's our chief strategist, and me, I put this out on our Discord. I said, it is very obvious that I am the dumbest person in this room. But I got to tell you, I am so grateful to be in that room. What a difference it has made.
In reverse, compared to most traders, where the average trader or investor panics during crashes and feels joy in booming bull markets, the alchemist's brain reacts the opposite way. If you could scan their brain during market extremes, you would see this inversion clearly. During crashes, their reward centers light up. They see opportunity where others only see fear. During euphoric bull runs, their stress responses fire. They feel genuine discomfort when optimism floods the market. This means the alchemist thrives in moments of maximum pessimism. They are the ones buying when everyone else is liquidating their accounts, selling their kids' college funds, and watching CNBC anchors speak like they are at a funeral.
So this is actually one of the core tenets of the OVTLYR software. Now, we talked about it before. It's, be fearful when others are greedy, and greedy when others are fearful. And Mark, when he built the algorithms, was exactly this was on his mind. He's like, listen, if we can figure out when people are at their greediest, or if we can figure out when people are at their most fearful, that is an opportunity to make a buttload of money. So I feel like Mark, our chief strategist, certainly falls into the alchemist category.
Their natural hunting grounds are market crashes, volatility spikes, distressed debt, and bankruptcy plays. Assets that the mainstream considers toxic waste. Simply put, they make money where others see only disaster. But this inverted psychology also makes bull markets torture chambers. In periods like 2017, when everything goes up and analysis seems irrelevant, the alchemist struggles. Their instincts scream caution while others ride easy gains, and worse, they are often right, but too early, calling bubbles long before they pop, and watching overvalued assets climb another 200% while they sit on the sidelines.
We're going to need to win some bingos here. We're going to need to win some bingos. So I'm about to give you guys several things. Oh. I hit the wrong part of the bullhorn. I'm about to give y'all several things. So let's see. G hashtag. Did when you say G hashtag, do you mean G3? We already have G3. No, we don't. Okay, fine. I'll give you G3. I'll give you G3 there, Charlotte. All right, King Arthur. He is the head of the round table. So he was saying 01 and N5. N5. Oh, I see what you're doing there, King Arthur. I see what you're doing there. But Kostya is totally right. Kostya nailed it. He's like, we need some high probability setups around here. So we got one bingo on the board. All right. Vitaly says, Chris, what are a few books best to learn trading strategies and candlestick patterns? So I have a book. It's very expensive, surprisingly expensive. Japanese, hang on, I'll make this bigger. Japanese candlestick. Yes, Japanese candlestick charting techniques. Japanese candlestick charting techniques. This is a very good book. Yeah, I've learned a few things in there. It's not necessarily my thing. But trading strategies wise, like I think the best thing to do is figure out what works for you and your lifestyle, because what I say could be completely different than what actually works for you and your lifestyle. So I would say actually in that case to pick up one of my one of my top five. No, this is the number one trading book, New Trader, Rich Trader. I actually worked a lot with Steve Burns, the author of this, and many people have said, "Hey, Chris, were you the new trader and Steve was the rich trader?" Maybe that was the case, but this is a brilliant, brilliant book, and it will put you on the right foot, and you will leave the left foot behind for sure. Great question. I need to ban the skinny buff guy. Sounds good. Where's the skinny buff guy? Where's the skinny buff? There he is. Permanent ban for skinny buff guy. No, I'm joking. It's Japanese. All right, let's keep going here. Let's see how many bingos we can get.
Alchemist's true edge is their emotional resilience during chaos. When everyone else loses control, they stay calm and strike. But during long stretches of prosperity, they need monk-like patience to avoid acting too soon. Famous alchemists include Howard Marks, Seth Klarman, and Michael Burry. Investors known for making fortunes by buying what everyone else was desperate to dump. The alchemist is like a contrarian chemist, turning market panic into gold. Their gift is thriving in disaster, but their challenge is enduring the long, sunny days of optimism without letting discomfort push them into premature bets. Now the question is, can you recognize which type of trader you are?
Okay, for everybody's watching, I do want you to put in the chat right now. There's nearly 400 people watching live as we speak. So put hashtag outlier first. That way you can be entered to win Big Money Bingo. And then put the type of trader you are. Put the type of trader you are. There was, let's let them do the recap here, but do this in the chat right now. If you're watching live, you're required to do this.
And when you do, remember this. Your archetype isn't a weakness or a limitation. If anything, it's actually your hidden competitive advantage. Most traders make the mistake of trying to copy the styles of traders they admire, but that is backwards. The goal isn't to become a better version of someone else. It is to become the best version of yourself as a trader.
Oh, that's actually brilliant. Don't be a better version, or I'm sorry, somebody else. Be a better version of yourself. I kind of love that.
And once you figure out who you are as a trader, you need to master your psychology. Watch this video to learn exactly how to...
All right. So hashtag outlier and Sentinel, or hashtag outlier and hunter, hashtag outlier and engineer, hashtag outlier or explorer, and then hashtag outlier or alchemist, right? I'm going to say for me personally, I am hashtag outlier and hunter. And as Bert says, and give it a like as well. Thank you, Bert. Give it a like as well. So for me, that is where I'm at. Daniel says he's an outlier. I love it. Hunter and an engineer. I would consider myself a hunter for sure. Anthony says hunter. Carol says sentinel. Let's see. Andrew says hunter. Paul Beal says explorer. Let's see. John Fulton says explorer. Corey says sentinel. Man, this is cool. This is so cool, right? And this is the best thing about the market is you don't have to be any one of these in particular to be successful. You can be, there's not success by one of these things is what I'm trying to say. You can be any one of these things and be successful. Like Mofo says a sentinel hunter. Jean-Louis says sentinel and hunter. Let's see. Tom says outlier hunter. Art says outlier hunter. I love it. This is so cool. But exploring learning to define my hunting grounds from Richard. Very, very cool. I feel like if you were to be any one of these things, you certainly need to make sure you're a hashtag outlier, but also you certainly need to be journaling your trades to figure out what type of trader you are. Oh no, is that right? Another bingo? Two bingos, baby. We got a double bingo. Oh man. Now, if only we could think of something. Architect Ray Ray. That's interesting. A combination of all of them as an architect. So Edward says he's a blend of several. I wonder if anybody wanted to break out and say what type of trader they might be. Yeah. What? Did you say break out? Did Jonathan just give everybody a third bingo? Oh, let's go!
Triple bingo! Triple bingo!
Let's go. Hey, how about we give away some cool stuff, huh? How about we do 3 giveaways for, in fact, let's double check that I didn't get any other bingos, right? So we got one right there, we got one right there, and we got one right there. Triple bingo in the house. There we go. Okay, let's give away some fun stuff. How's that sound? Let's give away some fun stuff. Who is going to be our first winner? Who is going to be our first winner? 3, 2, 1, go. Who's going to be our first winner? Dude, I got that smelly black coffee breath. That is for sure. Price Hunter. Price, that would be that would be a really cool name. Like we have a boy that's in our Boy Scout troop. His name is Price. And his brother's name is Park. And I get them confused all the time because it's like Park and Price. But either way, could you imagine if your first name was Price and your last name was Hunter? That would be a sick name. And speaking of sick names, Price Hunter is going to win a sick prize. Let's see what the Price Hunter is going to win. Let's see. Price Hunter wins a sit in cash and don't F up koozie. Outstanding work. Congratulations to you, Price Hunter. I'm on my other screen. Sit in cash and don't F up koozie. Congratulations to you, Price Hunter. Who's our next winner? Who's our next winner? If you haven't put hashtag outlier in the chat, you're not going to be a winner. It's just a fact. But you might be if you type in hashtag outlier. Let's go. Let's go. Let's see. Number 2 of 3. There's Price Hunter right there. You are welcome. And Tingu, first time catching live. I'm so glad you're here. Let's see who the next winner is, Tingu. Soul Invictus. Soul Invictus is the next winner. Congratulations to you, Soul Invictus. I wonder what Soul Invictus is going to win. Let's see. Let's see what Soul Invictus is going to win. In the Wheel of Fortune. Here we go. Soul Invictus. Let's see. A Monkey Hammer hoodie. That's a grand prize. Actually, our hoodies are the most expensive items we offer. So congratulations to you, Soul Invictus. Got a grand prize of Monkey Hammer hoodie. Awesome. Monkey Hammer hoodie. Outstanding work, Soul Invictus. You got a grand prize on that one. All right, let's go to the next one. And the final winner of the day. The final winner of the day. Let's do draw again. Let's do draw again. You are so welcome, Soul Invictus. Who's going to be our third winner? It's going to be Alan Clark. Congratulations, Alan Clark. You are our third winner of the day. Let's see what kind of cool thing Alan Clark has won. Let's see what kind of cool thing Alan Clark has won. Oh, we need to add 10, 20, 50 shirt to it, right? Yeah, that was the wrong button to push, though. Hang on. Here we go. Here we go. Who? Alan Clark is the winner. Let's see what Alan has won. Let's see what Alan has won. He's won $10 Outlier merch credit. Awesome. So Alan, you can go over to our link, and April will send you the link for everything, and you can apply $10 towards anything that you want here in the store. Maybe it's getting cold now, right? Maybe you want to get a Monkey Hammered beanie, or maybe you want to get your kid an Outlier Flag Kid t-shirt, or maybe you want to get an Outlier University hat, or maybe an Outlier Flag hat. Either way, congratulations to you, Alan. I need a new mug. All right, let's help Alan pick his mug real quick. How about this Outlier Flag mug? That's only $10.20, so it costs you 20 cents. That's a great deal to me. Perfect. Alan, congratulations to you. And let me put that in the email to April, $10 merch credit. Congratulations to everybody who is a winner here, and all of our outliers for playing Big Money Bingo. I hope that we are helping you change your life, right? Being an outlier is being different than normal people, right? You must be a completely different person to be successful in the market, and Outlier shows you how to do so. Now, listen, if you're ready to save time, make money, and start winning with less risk, there's 2 videos right here. You should totally click on one of them and have a fantastic day. We'll talk soon.